The news about the state of the United States and the Chinese economies does not allow oil prices to recover. Today, investors seem to be taking a wait-and-see approach, reflected by the lower trading volumes. And that's all for now. Боже, что я не сделала-то перерыв? Continue to trade downwards at around $74 per barrel. Notably, the volume of short positions may increase after the price fixes below the level of $73.50. At the same time, a sideways move with the price fluctuations in the range of from 2 to 3% cannot be ruled out. Markets are worried about renewed COVID-19 outbreaks in China. In addition, the European Union appears to have come to an agreement on a price cap on a Russian crude at a fairly high level of $65 and $70, which should reduce the risk of a relation from Russia and boost energy supplies. Furthermore, market participants have priced in data showing an unexpected increase in the U.S. crude oil inventories. Stocks rose by 3.6 million barrels, while economists had forecast a crude drawdown of 900,000 barrels. The dispute over the U.S. government debt ceiling has not gone unnoticed by traders as well. No agreement came out of U.S. President Joe Biden's meeting with the Speaker Kevin McCarthy at the White House on Tuesday. Treasury Secretary Janet Yellen, in turn, reiterated her warning that the U.S. could default on its debt as early as June if the government does not raise the limit. Against this background, investors are increasingly shifting their focus to safe haven assets, and in particular to the dollar. And that's why oil prices are suffering losses. Similar pressure is experienced by all dollar-denominated trading instruments. Gold futures still overcame the level of $2,000 per troy ounce on the third try. As a result, the volume of short positions increased, with the gold losing 1%. If the current trend persists, the quote will drop to the support level in the area of $1,970 and $1,980. Gold was also wound down by a stronger dollar amid hawkish statements by Fed officials. The precious metal is quite vulnerable to the news about the interest rates. According to Chicago Federal Reserve Bank President Austin Colsby, it's too premature to talk about rate cuts. At the same time, Cleveland Fed President Loretta Mester said that she does not think the U.S. Central Bank is at a point yet where it can hold interest rates steady for a period of time, given how stubborn inflation is. Likewise, the ruble came under pressure from a higher greenback, and the dollar-ruble pair continues to trade upwards and has already topped the level of 80 rubles. If the current cycle continues, the quote may well hit the level of 82 rubles per dollar, a local high posted in April. And that's all for now. We wish you profitable deals. See you on our channel with a new video in a couple of hours.